Hi, this is the Tokenomist. I'm a former stockbroker from the City of London, and I'm here to talk to you about the fundamentals or the cryptomentals of the projects you love and warn you about the ones that you probably shouldn't. Simply put, is that coin really worth it? So let's talk cryptomentals and find out what we're going to be looking at this episode.
This is the Tokenomist.
Hey, welcome to the Tokenomist. Today we're going to talk to you about one of the most boring companies in the top 20 by market cap crypto projects. They are a future potential giant or not, but they could be a competition to some of the major clearinghouses, settlement services in finance, in the bond market, in $1 trillion market around the world, and that is Chainlink. So stick around, we're going to have a look at that. But first, give it a little massage of the like button, and don't forget to the subscribe button.
So this is actually the second version of me doing this video. I can't catch a break, doorbell keeps going, someone keeps coming in, or as I did the first time around, I actually did this particular video for Chainlink, hence different t-shirt, but I recorded double audio, so this time hopefully she'll work fine. And let's talk about Chainlink. Now, full disclosure, I've got Chainlink, I like Chainlink as a boring project, but if you are expecting me to give you some crazy moonshot price now or tell you that Chainlink is fundamentally undervalued and it's really, really cheap and you've got to get it now, you're going to be disappointed. But on the flip side, if you've got a slightly longer term horizon, you don't care about the technical analysis and the charts and all that nonsense, and you actually want to look at a project on its fundamentals, I think you'll still probably really enjoy the general findings of this video. So my background, as I said at the beginning, is I used to be a stockbroker, long since lapsed, no longer a stockbroker, no longer work in that sector, but I was an investment advisor, and the principles that we used to apply when it came to identifying a stock, whether it was a growth stock, small cap, big company, blue chip, mid cap, different sizes, were generally still the same overarching thoughts. Now sometimes you would find a value proposition, you might find a company that the share price has been tanked down because of some random pandemic, or it may be a fast growing company. So we're trying to apply the same principles to some of these crypto projects and see whether or not they stack up. So I'm going to show you the CANSLIM chart in a second to give you a reminder of what that is. If you want to see the CANSLIM chart, I've actually put together a little presentation on the CANSLIM investment strategy approach. It's in a free PDF link in the description. It's not mine, I didn't come up with it. A famous investor came up with it called Benjamin Graham. So William O'Neill, Benjamin Graham was a different one. And I'm not gonna go back over and change that. I've done this video too many times and each time is a problem. But anyway, so William O'Neill, famous investor, talks about the CANSLIM approach. I take the CANSLIM approach and whack a few additional tweaks to it to allow us to have a look at different projects and understand if they are have investable merit. So I'm going to show you the chart now. So this is the CANSLIM chart. It stands for, well, stands for 7 different things. There are some additional elements to it that I would add, but in a nutshell, we're going to take a look at the earnings, we're going to take a look at whether or not they've got new products or they've got network effects, supply and demand, liquidity of the share price or the token price, supply and demand of their services, I suppose. Are they a leader or are they a laggard? That means, are they big in the game or are they a small fish? Do they have institutional sponsorship, institutional investment? So do big organizations get involved? And market direction. That's the small element of, I'm not even trading in technical analysis, but more just an indication of where things are going with the current price of Chainlink in this particular case. And it actually highlights how much of a percentage should really be applied in long-term investment strategies to the technical side of things. So there you go, that's CANSLIM. Let's jump back on. So who are Chainlink? This is Chainlink's website. Chainlink provide an Oracle service. That means they essentially provide a verified data service. So if you and I have a bet, and my bet is by the end of the day the temperature is going to be 25 degrees Celsius, and you say, no it's not, we need that third party to release the money in either way, depending on the result. And it's not that we trust it, because I could trust it more and you might trust it less or whatever. This just needs to be verified, hence the whole don't trust, verified. So that's what we have with Oracle. They are an Oracle. So we have Chainlink, they're an Oracle service. They are head and shoulders above anyone else. They are the leader in the market. There are some new Oracle services coming through on other layer 1 protocols, like Cardano has Charlie C3, who I actually happen to have a very small investment in because it's kind of a hedge against this one not being the big player. But that's what they do. It's pretty unsexy but pretty important, and they provide data feed pairs for a number of different trading platforms. You can see some of them here: Synthetics, the BTC price, and some of the platforms that they provide it through. Let's have a quick look here. They provide it through, they've got partnerships signed up with Google. I say Sandbank, as if we've all heard of Sandbank. Big ones in the game, Sandbank. Let's see what they've got. I know they've got Google signed up, which is pretty cool. They've got tons. You know, they're with Liquidity, SushiSwap. They're linked in with some of the biggest DeFi names. So, you know, the DeFi market goes up, they do well as well. For those of you who've got a punt on PundyX, there you go. PancakeSwap. They've got these guys run some of the nodes, so some of the different companies that make money by actually hosting the nodes that provide the data feed services. Is that Tezos? No, WeTez. Okay. Anyway, so T-Mobile Systems, random, provide nodes for that. So pretty big. Perpetual, Perp. I know that gets mentioned a lot on Tokenomics. What else we got? ENS, name services. Crypto.com, Loopring, Synthetics, Aave, the biggest names in BlockFi, the biggest names in DeFi. So they are pretty close to their market. So if DeFi goes up in any big kind of stretch of the imagination, if you know, add a zero to DeFi, you're probably going to add a zero to Chainlink as well. Now, what we want to look at is we want to go through the CANSLIM strategy, and we want to have a look really and see how Chainlink fits within those. So you've got a very brief understanding now of what it is they do. It's not sexy. They're not providing decentralized music services. They're not providing decentralized social media. They're providing a decentralized data feed, which is kind of cool sometimes. Some of the least sexy industries are the great ones, isn't it? Where there's muck, there's money, as they say. So that's what Chainlink do. So how do they stack up when it comes to earnings? Well, what we can do is we can get an indication of where their current earnings are. So let's have a look at the last or this current quarter and what they're currently doing. So let's go to Chainlink Market, which is pretty useful for this respect. And they're doing about 3,500 daily transactions. Now that doesn't mean transactions such as you and I trading and buying on the market. It's to do with they're providing 3,500 data feeds. Now one of those data feeds, those API transactions, may actually cover a basket of trades within it. But they're early stage investors who Framework Ventures, I'll find you, who put together a very interesting article about their investment in Chainlink. They're down here. They're a San Francisco, Silicon Valley based early stage investor in cryptocurrencies. You can check them out. Just Google medium.com @framework_v, and they talk about their investment thesis and why they think Chainlink can perform well, and where they've got a price target they had on it. I think it eclipsed it now, but one of the justifications is based on the number of transactions it can do in the long term. So for now, it's not doing massive numbers, 3,500 daily data feed transactions. Let's go back to it here. Lost where I am. Where the hell am I? Here we are. Sorry about this. I'm getting lost in a sea of data. Give me the data. Come on. It's link pool, isn't it? It's here. Where are we? Go away. Oh, I've lost it. Oh, it's here. Here we go. Changing metrics. I've got different favicons that I can't work out. So I need to have a shave of my itchy moustache. So we've got here last 24 hours. We've got 3,500 daily transactions. That's use of data feeds. That can be an aggregated number of different data feeds. I'm just gonna grab my coffee. We've looked at the last 7 days. They generated $1.4 million worth of rewards. As against a company that has a valuation of 10.5 billion market cap, total diluted is 24 billion. We can do this one, we can do this one. Either way, let's put some numbers in there, okay? So let's go back to the metrics. $1.4 million the last 7 days. So let's just divide that by 7. Where's my calculator gone? Can't see my calculator. Okay. Right, 1.4. Let's do 1.4. Divided by 7. Okay, it's 200,000 rewards generated per day on average. We're going to times that by 365 to give us an indication that that means they're making on average 73 million in rewards earnings per annum based on the current market cap. That's a pretty toppy valuation, but I've got a little chart I've been working on, a little spreadsheet. So let's bang in 73 million. 73 million. Okay, right. So what I've done here, this is linked by, this is market cap, total number of tokens in issue. I've gone straight for the billion, not messed around. Price here up at $25, why not? That's the revenue. This is just if the revenue went up 20% per annum. 73, which would be earnings per token of 7 cents essentially against the current price of $25. And that's a yield of 0.29% or a price to earnings ratio of 342. That's pretty toppy. Traditional finance be looking at 14 to 31, but it's a growth company. Okay, so this one we can accept that. We can accept toppy valuations. This is where I'm saying if you're expecting me to suddenly go, God, it's really cheap, you know, bear that in mind when you consider if you look at something like Sushi Swap and you've already got a really punchy yield even at these prices. I think Sushi Swap's even lower at the moment. Actually, I think it's something like it's like $9.50, so it's even lower. But anyway, so it is a strong, high valuation at the moment. That's so you know, I'm not gonna. There's no point beating around the bush. You know, $25 market cap is about 20% above the bull case price prediction of Framework Ventures when they invested into Chainlink 3-4 years ago. My voice is going funny. So you know, it's above where they thought it was ever going to get to, and it hasn't yet started doing that level of business yet. Does that mean it can't go on further and go to the moon? Well, I wouldn't have bought into it if I didn't think so. You wouldn't have institutional funds buying into it with 21 shares, a company called 21 Shares Exchange Traded Products. So obviously people think it can go on a lot further, but just want to say, hey, look, right now, annualized revenues are 73 million, market cap, fully diluted market cap is 25 billion. And that's an expensive valuation. That's all I'm saying. But it's it's early doors. So that's about current earnings we're looking at here. But more importantly, let's have a look how they're doing over the last 90 days. So current earnings, the C. Okay, what we can see here is an upward trajectory. There's been some bumps. I know that there's been some days where it's earned less rewards revenue, but generally it's an upward trajectory. So the last 90 days, we've gone from 25th of March, 184,000 link rewards generated, up to now 10th of June, 1.4 million. So that's a hell of a climb. So that's 1,000x in terms of 1,000% in terms of rewards generated. So it's definitely going in a very attractive curve. The CANSLIM strategy when it comes to investment was to look at 25% growth quarter on quarter. Well, this is looking at 1,000%. So yeah, it wins there. So next up we've got annualized earnings. Now I don't have the exact figures or any of the figures for the last few years for Chainlink, and the reality is the use of Chainlink has gone up exponentially, and there probably wasn't a great deal of use previous years. So of course the use of Chainlink is going to be higher than the previous years. So what I want to have a quick look at is tell you what it means. So annualized earnings is when you kind of work out roughly what the annual earnings or the annual profit making of the platform can be based on some shorter term numbers. You might times them up by something. But also when you come to doing the CANSLIM strategy, you'd be looking at how much they did this year on previous years and on the previous years, and is there a significant jump? Is it 3% growth or is it 25% growth? Is it 300% growth or is it 1% growth? How much of that growth is there? There is also one aspect I want to quickly just cover, which is what the realistic journey or the future could look like. Now, Framework Ventures, who are one of their early stage investors, who I've mentioned before in this video, they have a base case that they believe, or a bull case they believe, they're two different things, that Chainlink could be looking at doing about 800,000 transactions per day in a sort of fully developed state. And that's dealing with transactions with the bond market, tokenized securities, things that can generate some real profit with that data feed. If we look at what they earn now per transaction, per API transaction, and then look at what would happen if you did 800,000 per day, you actually generate a figure of, and I've got it down here in my spreadsheet. That's the wrong number, that's actually half the number. You generate a figure of 12 billion. I don't know why I have to type it down. You generate a figure of 12 billion. At the
total addressable market, full diluted market cap of 25 billion, with 1 billion tokens in issue. If we look at their current market cap of 25 billion, that's their fully diluted market cap with a price of $25, you'd be looking at if it's earning 12 billion per annum, you'd be looking at a company that essentially earns 50% yield. It's not going to happen. So what happens is the yield falls as people chase that yield, and therefore the token price goes up. If we looked at a price to earnings of 12, which is incredibly conservative in a fully established, fully developed financial business, we'd have a token price of $144. So as I said, if you wanted me to tell you it's going to be $1,000, you're not going to hear that. But in return for the measured risk you take with Chainlink, as in being the leader in the sector and being a pretty boring and already starting to establish themselves player, you're still looking at a price that's about 6-7 multiples on the current price. That's pretty good, particularly if it can get there in the next 5 to 10 years. You look at things like the S&P 500, which generate an annualized return of about 8% over the last 70 years. People wouldn't sniff at that. Now, could you make bigger returns on Shiba Inu? Yeah, I'm sure you could. You can make bigger returns on any coin, on Cumrocket, on PawnRocket. But the reality is, would you want to hold your money in it for 5 years? And would you put a significant enough sum in those ones that would warrant a much bigger return? The kind of project you might put more money in is a project like Chainlink. So what we can look at here is if we take a look at the price to earnings ratio and we call it 20, let's put a 20 in there, a bit more realistic, 5% yield, again, very, very good, sort of thing that shareholders that look for dividend returns would be looking for, as a yield of a yield of 5%, a P of 20. You'd be looking at a token price of $240 if those things came to pass. Now that depends on the revenues being generated, and as I will say at a later point, my concern is the more it scales and the more the price goes up, the more expensive Chainlink becomes. So Chainlink has to lower the price it charges, and if you lower the price you charge for something, well then you're gonna take a hit, aren't you? If Apple in the morning woke up and said, we're gonna hear my house moving around upstairs. If you can, I've done this video so many times now, I'm just not gonna there's a noise upstairs, someone's moving a bed. That's what's happening. If in the morning Apple woke up and put in the press, if in the morning Apple woke up, Apple's a company. If Apple announced one morning they're going to slash the price of their iPhone in half, yes, they're going to see more units sold, but they're not going to suddenly see their revenue double. It's just not realistic. And so what happens is their share price may take a hit because people appreciate they're going to start making less profit. And you've got to bear that in mind. As they scale, there is a potential crunch with the price to use the service. If you want the tokens to go up and up, then consider how that makes a currently centralized business decide whether or not they use Chainlink. And I think that's the real problem for the whole sector. You know, you get people go, oh, my project that I really love is going to be currency and it's going to be money, it's going to be using everything and it's going to scale up. It's like, well, it can't really be those things, because if you hold a token or you pay for a service, you kind of want to hedge the cost of that service. And that's where I think a lot of people are missing in this game when it comes to looking at fundamentals of business. Like, you can hold a token and think it's going to go up in value, sure, but I run a business. This is just to do this as a bit of a laugh. And in my business, I need to know how much my Shopify Plus is going to cost me every single month. I don't want to be paying more money every single month. Oh, if you hold Shopify tokens, it'll be fine. I don't want to hold my money in Shopify tokens. I want to hold them in my normal currency, whatever that currency happens to be. So people aren't thinking those things through. But if the cost to acquire a link is the same, I mean, there's the flaw in these numbers as well, is, when we're considering you're using Link to pay for the service, if we consider you're paying in dollars, for example, I think that's the best way to look at it. If you consider you're paying in dollars, and that's a dirty word, then you would achieve at current prices about 12 billion revenue per annum for Chainlink Network, based on that bull case from Framework Ventures. You can check it out on Medium, as I said before, Medium at framework_V, and that would potentially produce, if a PE of 20, a token price of $240, which is no ifs or buts. But if the PE was 20 and it was doing that level of revenue, that would be the token price. Whether it happens or comes to pass is an entirely different thing. So that's annual earnings. Okay, so next up you've got N, new product. Well, the beauty of providing an Oracle service is, as they take on new clients, and those new clients, they take on Sushi, or they take on Hedera Hashgraph and new protocols, and those protocols develop new products,
essentially Chainlink have got a new product. They've always got a new thing they can do because they're providing constant services to new clients. So that's quite cool. Network effect, they are, in terms of signing up clients, they are the leader, as we'll get to in the L stage, the leader or laggard. They've got that network effect, they're growing, and they're cross-chain compatible, or they're agnostic, which means they aren't reliant on just Ethereum doing well. They can, as I said, they've signed up with Hedera Hashgraph, they've signed up with other layer 1 protocols, which means if those ones grow, then dandy. Okay. S stands for supply and demand. Supply and demand relates to the stock itself. Is it liquid? Is it illiquid? You have a gamma squeeze. It's pretty damn liquid. The number of transactions per day on the actual token price. Let's have a quick look at this. Volume. You're looking at last 24 hours about 1.8 billion, 1.5, 1.1 billion. Okay. And if you have a look at the trading volume over the last historical data, you can see that it hasn't very often been below 1 billion. Down there, on May the 19th, it was about 5 billion, 5.2 billion. May the 19th, the day it crashed, 5.2 billion of panics. But it's a lot of, it's in the billions pretty much every single day. Sometimes multi-billions. It was a lot higher March, February time. People say sell in May, go away. Institutional funds go away on holiday. They take time off from the markets. Maybe if people want to be outside, I want to be outside that way, fixing my front wall today. So, but the key thing is there is supply. So the share price or the token price isn't going to move wildly just because of one big dump in the market. It does need a bit more than that, which gives you a bit more strength if you have to sell a position. A bit more confidence, the price is a bit more stable. More importantly, it means people like it. It's doing $1 billion worth of of volume every single day. People like it. It's on people's radar. Big people are trading it. That's good. That's a bit of confidence. And I think when you look at the institutional aspect as well, and it kind of plays into that too. The L aspect is leaders and laggards. When it comes to leaders and laggards, they are the leader. Bar none, really. There's nothing much else to say, really. They are the leader. If you are investing in Chainlink, you are investing in the best oracle in the ecosystem of crypto, based on signed up business and just reputation, I suppose, and market cap. They are the leader. Okay, and that's opposed to betting on a really small one that could be small because it's bad, or it could be small because it's brand new. So there's always more of a gamble. These are already established. Those networks are going to grow and help them grow even further. I, institutional, so supply and demand aspect as well. Again, who's investing in them? They've got a number of, you can check them out on Crunchbase actually, they've got a number of Silicon Valley investors. One of the early investors in Keek invests in Chainlink. They've got 21 shares, which is an institutional fund that invests in them. Grayscale has a fund in them. So there is a number of large institutional sponsor investors putting money into it. Christ, look at the price of ETH gas today. 8 Gwei. Well, that is good. 10 Gwei, 7 Gwei. Sorry, because it's 100 sometimes. It's really come down with Arbitrum and Polygon. But they have big people in them. Big institutions are putting their money into them, and if they're putting their money into it, the chances are they're more likely to be right than you are. Not always, but big money. And finally, you've got market direction. So this is the only aspect I'd ever look at technical analysis. Where are things going? And I guess the reason why this forms part of the CANSLIM strategy is if the market's tanking, you could buy and dip, or you could just wait for the market to run out of energy and maybe get it lower. For me, I tend to dollar cost average or pound cost average. I buy regularly every week. So for example, Bitcoin, I buy Bitcoin every Sunday lunchtime, because it's usually the best time to buy it. I buy the same amount every single week, because that means if it goes down, I get more for my money. If it goes up, I get a bit less for my money. But it means when things go down, I'm happy to. When it comes to market direction, because I don't like talking about technicals, I would look at it as a business over the last last few years. Where's it going? Where over the last 1 year, for example, that's a general trajectory. And forget about the price in general. Just imagine this was sentiment, general sentiment. The general sentiment and the general awareness of Chainlink as a project has risen from this point last year, where the price was $4, to the point where it's hit $46, and it's $24 now. So general sentiment has spiked massively. The market direction is going up. I like it. As I said, if you wanted me to tell you that I think it's incredibly undervalued right now, I would be lying, because I don't think it is. It's just my personal opinion. I think it's priced like a project that probably should generate more revenues, but also I know that they are the market leader, and there is value in the networks they've built. There's value in the brand they've built. That's worth a lot of money, and I think they're in a position where they actually can do some of these large volume businesses, these large volume transactions on a day-to-day basis. My only concern, again, is as volumes go up and the price goes up, you've got this issue where the transactions become very expensive. Not the gas fees, the transactions. So does the price fall to accommodate a rise in the to accommodate new transactions? And also, you think about it, if you're using a centralized network, you're looking at it relative. So relatively looking at it, relatively speaking, you're going, this is a really expensive service to use. And it's all very well someone saying, well, if you think about it in fiat terms, it is. It's like, yeah, they are thinking about it in fiat terms. So this is one of those things where I think, could I be wrong? How could I be wrong? And what's going to put people off? And in the day, bottom line is money, isn't it? So that's just something to bear in mind. But I think you look at it and you think, if you're confident that those transactional volumes can continue to climb over the next 5-10 years, well, then you have an understanding and a benchmark to have a look at as to where things can go in terms of the price. If they get to the point where they're doing 12 billion per annum, phenomenal. If they're doing half that, current price $24, you wouldn't sniff at that, would you? I know we all want 10x, but you've got to look at as well is with some of the mid caps, there is an element of risk protection. With Chainlink, you're paying a premium for a project that's not right. Let's have a look here. How does my numbers work? Okay, I need to fix my spreadsheet. The others don't work, so I'm just playing around. There you go, 40 P40. just because. What have we got here? Okay, but anyway, so if we just went, even for P, what you're looking at is you're looking at a project that has the downside protection from brand and project and awareness and integration and potential revenue in the fact that they're a mid cap. The upside is still going to be very strong if they do what they say they're going to do. Is it going to be as big upside in the near term as some random micro cap? Probably not. Any project can go up. Shiba Inu can come up. SafeMoon can go up. But it doesn't mean that necessarily a good project that you'd hold 5, 6, 7 years from now. As always, there's a really good quote, and it's we overestimate what we can do in the short term, and we underestimate what can be achieved in the long term. And I think that probably goes for many companies that we've ever heard of. Amazon, no one would have anticipated that it would become a $1 trillion company 20 years ago. We massively over-expected what would happen to them in the dot-com era, and we under-anticipated what they could do in the long term. Google's the same. So there you go. That's my breakdown on Chainlink, looking at the CANSLIM strategy. I'm going to go outside and go and fix my wall. Do I think it's a bit expensive now still, even at these prices? Long term, I'd probably be saying no. But in the short term, you may still see the market come off a bit. It's hard to know, and I'm not here to give you professional advice on that. All I wanted to show you was my personal thoughts on Chainlink. If you liked it, hit the subscribe button. If you want me to look at anything else, do ask. Thanks for watching.